Welcome to My Money Mindset podcast, where we explore how a healthy mindset is the foundation for financial success. Each week, we delve into mindset hacks and practical strategies to help you enhance your income, help you make more appropriate investments for yourself, and to improve your overall financial well-being. Join us on this journey to transform your financial future by transforming your mindset. Please note that the information provided on this podcast is for general information purposes only and does not constitute as personal, financial or health advice. It has been prepared without considering your individual objectives, financial situation or life needs. Before making any financial or health decisions, you should consult with a qualified professional or financial advisor to ensure the information aligns with your specific circumstances. So let's begin and enjoy this journey as each episode teaches us on how to improve our overall mindset that it overall improves our financial success. Hello everyone and welcome to another episode of Money Mindset. Today I'm actually going to be speaking about offset accounts, or pretty much offset against the redraw account for mortgages, as in property. The reason why is simply because I've had a lot of my clients and people ask me they're not sure if their offset account, which is related to either their home loan or investment account, is actually doing what it should be doing. So there's no better way to actually get the message across to those of you that are wanting to check this and make sure that everything has been set up in the bank accordingly, and also some tips on what to look out for. And obviously, if this is all something that you really want to make sure that the offset is working for you, or even for that matter, your redraw account's working better for you or is working for you, not against you, please contact me. But realistically, the offset is an account that those of you, not everyone has one. Most people can often say, well, look, they've had an offset, it works well for them, but a redraw is quite easy. It's a little bit more simple. Often the redraw is cheaper than an offset and sort of works in the same way, but I'll describe. So an offset account is pretty much like essentially a standard everyday transaction account, but it's linked to your mortgage. It's the term netting in banking. So it operates on the principle of netting. Every night the bank checks the balance in your offset account, right? So if you've got a home loan of $500,000 and you've got $100,000 sitting in your offset, the bank, because it calculates interest daily, it checks the balance that's in your offset account, which is linked to your mortgage. So in this instance, let's call it $500,000 in the mortgage and $100,000 in your offset. The balance is then subtracted from your outstanding loan principal. So in this case, let's call it 400. So 500 minus the 100 is 400. The interest you are charged for that day is calculated only on the remaining amount, known as the net principal balance. So in this case, on the example, would be 400,000. There is an equation you can use, and I'll put it in my notes on the episode, but there is an equation to find out the interest charged. And what you do is you get the annual rate. So let's say your interest rate is common 5.2% at the moment. And you'd say divide that by 100, that's your actual rate. And you times that by the loan balance minus the offset balance divided by the days in the year. So I'll simplify that, and it's quite hard to express just vocally, so I'll put it in the notes. But if you say, work it out this way, the loan balance, so in the example I gave you was 500,000 minus the offset balance, which was 100,000, that means 400. Divide 400 by the days in the year, obviously 365, and you times that by your 5.21%, or whatever your actual interest rate is on your bank statement. You'll be able to see that on your bank statements. And that's the interest charged. So, and just when you're working out that annual rate, so if it's obviously, if your interest rate is, let's call it 5.21, you divide that by 100 and you use the figure of 0.0521, okay? So, now that's basically just a short description on how it all works and everything and the benefits of an offset. Most people like an offset simply because they're not actually putting the cash into the actual home loan, and they can sort of pull this money out at any given time type of thing, depending on that type of whoever the bank is in the mortgage. So you have to double check that. But most of the time, it's readily available, that 100 grand in the example I used, to use for whatever it is. It could be a car, buy a fridge, whatever, rainy day. But a redraw does often work this way, but obviously you'd have to check with your bank. So the redraw is quite simply just a home loan, and even if you do place surplus amounts of cash into your redraw rather than an offset, which means that you're just paying your home loan off directly, there's no other accounts associated with your home loan. Most instances, some banks allow you to take out the principal. Now, obviously, it depends on terms and conditions. So before you go into doing that, you'd want to speak to your broker or your bank. Obviously, ring them up and get confirmation on what's going to be the most advantageous way of you doing it. But it's in short, that's basically what the differences are. The key benefits with offset, so a shorter loan term, by consistently reducing the amount of interest charged in your offset, more of your regular repayment goes towards the actual loan principal, which obviously accelerates the payoff timeline. And you want to make sure you're with a bank that doesn't sort of charge fees for paying your home loan off sooner. You want to get rewarded for that, not paid fees for it. So very effective way of reducing the home loan down a lot. So accessibility of funds. So unlike placing extra money directly into the redraw, like I was saying, on the home loan, the funds in your offset remain fully accessible. So just have a look at your terms and conditions with the bank before sort of putting your stamp of approval on what I just said. Just make sure that is what they allow with their offset and redraw. So you can deposit your salary, pay bills, withdraw cash at any time without needing to request or things like that. So that's why they say it's quite efficient. Maximum savings, since mortgage interest is calculated daily, leaving your funds in the offset account for even a few days minimises interest accrual instantly. So it's the most effective way to utilise the cash savings against a variable rate mortgage in any given time, right? So it's something you definitely want to have a look at and make sure that it is for you and that it's doing what you want it to do. So most of the time, what I would tend to say with an offset is it working or is it what you ask? So a lot of the time there's someone that may have asked for an offset account, whether it get lost in translation or whatever, they don't end up with an offset, they end up with a transaction account, or they haven't double checked with their bank. The bank may come back and say, yep, we've confirmed the offset. This is why I say make sure you do contact your bank and your broker and everyone's along the same lines, and you're actually you have got what you want, and it's an offset that is reducing your interest and doing it properly. So this episode is going to be in relation to how do you check that and what to look out for. So home loan health check and offset account guide is what I named it, and I'll put this in the notes, but it's something that's crucial, right? So a review of your current mortgage, your structure, the interest, all that. I suggest you should be doing it. Oh God, some people do it every month. Look, that's probably a little bit overboard, but I definitely keep a finger on the pulse. It's, financial health relies on, just like your health for your body, it requires you to be sort of not focused on it so much, but really keep a finger on the financial pulse. Home loan health checks, and that's what I call them, simply because this keeps you making sure that everything is in accordance. It's not like a home loan should be a set and forget, but with so many improvements, technology, things like that, that's forever changing in the banking system. I would always say, look, you don't have to be an expert on it, but know that it's there, and your broker should be contacting you all the time regarding that. If they're not, guys, change brokers. That's it. Your broker is like your doctor, right? It's your GP. They're not going to do the exercises and the dieting for you, but they will advise what to do. Now, home loan health check would involve the interest rate, the savings you could do that. Most of the time I'm seeing lately quite a lot of savings being able to be done. People or brokers aren't doing the right thing by their clients. And guys, there is a massive amount of opportunity for you to save even money. I've saved up to, even if it's $250 a month, it all adds up. That $250 a month can easily help you pay it off a lot faster. Fees, they could be overpaying silly fees that they don't have to by refinancing. all that, fee elimination, I call that. Structural optimization, sometimes when you got it or you bought the house and you haven't done a home loan health check since you bought the property, make sure that the loan that you have is actually, verifies that the loan type that you've got suits what's happening in your life at the moment. Repayment frequencies, I would always say, look, if it suits, make sure that it's fortnightly, weekly, that sort of stuff, rather than monthly. There's so many different things, and obviously the feature utilization. There are different features. If someone, I'm not saying to get really involved. I mean, the most simplest home loan account is often the better one to pay off faster. I always find just make sure that you're on top of those 4 things. Now, what's involved with a home loan health check? Well, basically, pretty much we look at the rate and the term review. So 30 years is the term, or it could be 25, 20 years. What's the interest rate? How competitive is that current interest rate? And what are the other benchmark that the other lenders could potentially be providing you with their comparable products that suit you, right? It's not such honestly, it's not a big deal to ring your broker and just to find out, are you actually paying a very competitive rate? Always look out for that, number 1. Number 2 is the structure assessment. Does the structure of your current home loan line up with your goals in life? So for instance, like I said before, you bought a property, that could have been 5 years ago. Your goals back then were a little bit different. You might be looking for another property now, or another investment property, that sort of things. Does the current bank and setup, or the structure of your loan, align with your future financial goals? That sort of stuff. Once again, your broker is the best bet to sort of banter with this, and your accountant, or if need be. A good broker will always foresight the future for you and make sure that this is all in accordance to your goal alignment capacity. So we want to make sure that the serviceability, has your pay gone up? Has it gone down? Have you had some children in between the time that you bought a house and had the loan? That sort of stuff. Have a look. A soft assessment of your current income and living expenses sort of will determine your borrowing capacity, which is essential for refinancing. Sometimes you can get loans that do not require finances, so we do that quite a bit. It depends on the circumstances of the time. So call me if you do want to question that. Feature analysis, so efficiency, review the use of the offset or the redraw features to help sort of calculate if they are maximizing interest reduction. So, and lastly, strategic recommendation. What is the outcome? So when we compare different lenders of the time and see how compatible they are to and competitive they are to your existing home loan, we make sure that we can negotiate a better rate with the current lender, or refinance to a superior product with another lender, or superior product with the same lender. It's the same thing, right? So now, checking the offset account's effectiveness. I'll conclude the episode with this, and the offset account works basically works because your daily balance in the transaction account is legally offset against your mortgage principal for the purpose of calculating daily interest, which is commonly known. It is one of the most effective ways to save money, right? So, but if you should be checking this to make sure it is working correctly. The core formula for this, I have written it down. I'll write it in the notes, but it goes back to that formula. The daily interest that you want to work out is the mortgage principal minus the offset account balance, times that by the interest rate divided by 100, right? And then you divide that by 365. Once again, vocally, it's very hard to describe, but I'll place it in the notes. Those of you who are interested in the equation, how to sort of work that daily interest out. But how to check, like this is what I call the practical test. Once again, I'll put in the notes. Locate your home loan statement. So locate the statement. Find your last monthly or annual home loan statement, something like that. That'll help. Check the interest charge line. It will say interest charge. Some people get confused that the interest charge and the repayments are the same thing. Interest charge is just the interest, but the actual repayment, most instances on the principal and interest loan will be principal and interest, and there will be another figure of that. The accompanying text should confirm that the interest was applied only to the net figure, so principal minus offset balance, right? Now run the simple equation, which once again, note your loan balance and your average offset balance for the month. Calculate the net balance, so loan minus offset. use the interest rate to estimate the interest due on the net balance, and then compare this estimate that you've just worked out to the actual interest charged on your statement. Okay, so if the accounts match, your offset accounts is functioning perfectly and saving you a correct amount of interest daily. So look, this is, it may be a little bit too involved. Most of the time people will just say, look, give it to your broker, let them check it. Make sure they do check it, guys. Sometimes, and once again, the reason I have done this episode is simply because the broker goes, yeah, no problem. And, you know, it's placed under the carpet. Really make sure this is your money. Once again, a doctor is for your health. He will tell you to diet, he'll tell you to exercise, he'll tell you to do all this. Whether or not you do it, it's the same thing with your finances. But double check, yeah, and actually do the exercises. Your broker should be, or your bank or your account should be advising you of this on a regular basis, not just something that, you know, be reactive that there's a problem, then look into it. Only reason why is time is money. So the sooner that you rectify issues, the sooner that you start saving more money. So time is money. Stop wasting your time. In other words, stop wasting your money. So I hope this episode really does help, guys. Like I said, reach out. I'm happy to do a home loan health check only because this is the core fundamental parts of paying off a property sooner than later. It is it. It's the basic one-on-one functions or functionality and exercises that we should be doing in order to sort of get on top of things, especially if it's a larger mortgage. Now that interest rates are starting to fall, and hopefully we will get a few more drops before then, even if it's not, we can only deal with what we've got in the environment that we are. And if you are committed, or you definitely want to pressure test whether it's worth keeping a property or investment, happy to help as well. But fundamentally, paying off a loan and making sure that your offset account is working in accordance to your plans, absolute paramount. Okay, guys, hope this helped. I'll see you on the next episode, and take care. Thank you.